Hey, what's going on? It's Corey, the insurance guy here. And on this show today, I want to talk about how to get into a home. With all the crazy thing that's going on here, you need to find out how to get into a home because I know you're tired of renting. Prices going up. You need to get into a home, something that you own yourself, okay? So I got my man here, Preston Roberts. He is a lending expert, okay? He knows all the different ways to try to get you into the home, okay? He is with CMG Home Loans, and he's on the show today. Thank you, man, for joining us today.
I appreciate you,
man. Thank you for having some time to come through, man. With me doing the insurance, I'm having people hit me up about insurance and how do I get in this? I see you doing the insurance, Corey. Can you help me? So I say, you know what? Let me grab my man on here. We got a couple of questions to ask you about lending and how people can get into homes. Is that cool?
Yes, sir. Let's get it.
Okay, so let's start off by saying, how does your credit score really impact buying a home beyond just getting approved?
Yeah, so that's a good question, man. I appreciate you for asking that.
Okay.
So your credit score is really a big determining factor on getting approved because your credit score, that's going to determine your interest rate, right? So the higher your credit score, the lower interest rate, which in hand, that's going to lower your monthly payment. Okay. So the better your credit score, the lower your monthly payment is going to be.
Okay, so you think that they need to be trying to work on that before they get to you, or they just need to come see you to even figure out where they are, how to get started?
Man, that's a tough one. I mean, because it's hard. It's like ripping the Band-Aid off sometimes, right? Because you got to rip it off to know what's underneath, right? So sometimes, like if you've been on the fence 3-4 years, like just come to me. Let's figure it out, right? But if you know like your credit score is real bad, let's get you with a credit expert. Let's work on your credit score, and then let's come up with a plan to get you where you need to be within the next 6 months to a year.
Okay, sounds good, man. The next question, I had somebody slide in my DMs asking me, why is a pre-approval so important, and what happens if someone skips this step?
Yeah, I love that question because a pre-approval is so important because you don't want to look at homes in the 400,000 price range and then find out later, okay, I'm only approved for 300,000, right?
Yeah, we been wasting time.
Man, and then like it's hard to go from 400, looking at the houses in the 400 range, and then you go down to 300, right? It's real hard.
It kind of deter you from even wanting to get a house.
Exactly. You're like, man, I was wanting this, So to prevent any heartbreak and any discouragement, and plus you want to know your budget before you even go look at it, because you might be approved for 400,000, but your budget, which you're comfortable with paying, is only at 300,000, right?
Yeah.
So you want to get that pre-approval first.
So I've been hearing that even though you may be pre-approved for 400,000, you're not supposed to extend the loan all the way up to 400,000.
Exactly.
Okay.
I mean, you could. I mean, if you don't have any other debt, and this is like your only debt, you don't have a car payment, no student loans.
What's the odds of that?
You can do it, right? Most people have student loans. Most people have car notes. So yeah.
So what makes up a true monthly cost of owning a home besides the mortgage?
Okay, so you mean as far as like utilities or?
Well, the mortgage payment, because it's comprised of more than just paying the loan on the house, right?
Gotcha, yep. So with that, what makes up your total monthly payment, we call it PITI. Okay. So it's principal, interest, taxes, and insurance.
PITI.
Yep. PITI. Yep. And then some homes, like, and it depends on the loan program too, like FHA, conventional at sometimes. Whenever you put less than 20% down, you have what's called mortgage insurance. Okay. So that's an additional insurance on top of the hazard insurance that you would have to get. So you have that plus your HOA. If you buy a property in an HOA development or HOA community, you have to pay that as well. Even though it's not paid within the mortgage, that's still a monthly payment that goes with the house. And we have to factor that into your DTI.
Ooh-wee. So you got the mortgage, and you got the mortgage insurance?
Yep, mortgage insurance if you put less than 20% down on most loans. Now there are some loans where you can get in with less than 20% down and still not have mortgage insurance. So yeah, we just have to look at your, your situation, your profile, and then we can determine like what loan options you have once we look at it.
Man, we're dropping jewels and gems, man. We're trying to get you into a home this year, okay? Corey, the insurance guy, I got my man Preston Robert, who's the expert loan officer here today. How does someone's job history or income stability affect their changes in getting approved?
Yeah, that's a real good question because I see this a lot.
Really?
So with the job history and like income stability, you want to be at your current job for at least 2 years. Because the lenders, that's what they look at. That's one of the most important things that they look at is income stability and your ability to repay that loan.
Right.
Because if not, then that's a risk to the bank, and then they have to take that house back, and it costs the bank more money to foreclose a house than it does for you just to pay your mortgage on top.
Wow.
So that's a big factor. And like, you want to be at your job for at least 2 years unless you're a salaried employee. So if you're salaried, you can, as long as we have a job offer letter, we can use that income. Like if you got hired today with a salary income, we have a job offer letter, we can approve you with that income.
Okay.
Because it's guaranteed, right? Because it's a salary.
Yeah, it's a salary. It's not an hourly thing where they can cut your hours
Exactly.
down.
You're getting this $70,000 guaranteed no matter what.
Boom. There it is.
Yep.
Can you explain what a debt to income ratio and why is it so important?
Yeah. So the debt to income ratio, that's your total monthly debts divided by your gross income that you have coming in every month. Times
so give
100.
Give us some scenarios with like easy math, like 100,000, 50,000. Give us a scenario.
So what do you mean? So scenario as far as that, like?
As far as the debt to ratio income.
Yeah.
I guess a bad situation where the debt is too high.
Okay. So really, you want to look at the total debts, right? Divide that by the total gross income. And then your DTI, and then you times that by 100. That's going to give you the percentage. The DTI, you want to keep it around 43%.
Okay.
We can go all the way up to 57%.
Okay.
But that's kind of risky.
It's
so
pushing it.
It's pushing. You want to keep it below 43. Because with 43, you can do THDA, which is down payment assistance, where you get into a house with no money out of pocket.
Okay.
So we can do that. Or USDA, the max DTI for that one is 41%.
So you got the debt.
Yep. Total monthly debts divided by the gross income.
Gross income.
Times 100.
Times 100.
And that's going to give you your debt to income ratio.
Some of y'all need to do that right now.
Yep.
You need to pull up your credit report, see how much your debt is, and then take your paycheck, take that, divide that times by 100. We're giving you the information so you can get into a home, guys. 2026 is what we're doing.
Exactly.
How much money should someone realistically be saving before they start the home buying?
Woo! This is a hard one right here.
That's a good question right here.
Because like, as a lender, I get paid only when I sell loans, right?
Right.
So I don't want to deter people, but if it were me, and just based on my experience, because when you buy a house, things are going to happen. Things are going to break.
Life be life.
Right, exactly. So you want to have at least 3 to 6 months worth of living expenses saved up before you buy a house. Not only because, things happen, but also because you want to have reserves in the bank. Because that shows us, the lenders, that you're responsible and you have money in case something were to happen. Okay. And then just to add on to that, like when I said like things will happen, like when you buy a home, they're going to break, right? Right. They have what's called home warranties. So you could get a home warranty and that covers all your appliances. So stove, fridge, microwave, HVAC. So instead of like, let's say if your HVAC goes out within 3 months of you buying a house, instead of you dropping $2,500, $3,500 to get it. Yeah. Exactly. But with the home warranty, you come in, you pay that $500 deductible and they come out and either fix it or replace it.
Get your home warranty.
Yep.
Get you a home warranty, man. That's mandatory.
And it's only $500 a year, so it's not expensive. Anybody can do it. Like, it's one-time payment, $500 every year. It's not bad. Like, it's a no-brainer. Like, I'd rather spend $500 versus $20,000 any day.
Yeah, stove and refrigerator gonna cost you more than that.
Man, what you said?
And then trying to get a service technician to come out there and come fix it.
Exactly. That's the hardest part. I mean, one of the hardest parts. Yeah.
In a timely manner. Man. Because all your stuff in your refrigerator be messed up. What are the main differences between loan types of FHA, VA, and THDA, what you were saying earlier? Okay. So the main difference in those programs is really the down payment requirement, right? Okay. So with FHA, the minimum down payment you would have to pay is 3.5%. Okay. And with that, that's of the purchase price. So for easy math, if the house is $100,000, you will pay $3,500 for your down payment. Okay. And with that, you have to pay that like yourself. Like you can't get that from a gift. The seller can't pay that. Like you have to pay your own down payment. So you have that, or conventional, you could do as low as 3%. You can do 15%, 20%. But really with those different loan programs, it all comes down to the down payment amount and if there's mortgage insurance required for that type of loan. Okay.
Yeah.
And so when they can come to you and get all these different types of loans for their home.
Oh yeah, we have over 800 loans at CMG Home Loans. Like
800 loans.
There's so many different loan programs for any like type of person, like a self-employed, W-2, like hourly, salary. We have all type of loan programs.
Man, I'm saying this is new information for me because I just thought that there were just these 4 or 5 different options.
Right.
Do you qualify for this one? Do you qualify for this one? Ding, we got you one right here. But to know that there's 800 different options for you. 800 different options to get you in a home. My man is right here. He's going to help you get in that thing, okay? What type of debt hurts buyers the most when they're trying to qualify for a home?
Man, I'm going through one of these right now.
Right now?
Right now. So the debt that hurts buyers the most is the buy now, pay later type of debt, like the consumer debt, like it's the afterpays and the Klarnas, yeah, like those type of payments. You don't want to have those because a lot of times when we pull your credit, we don't see it on the credit report. But then once we get the bank statements, it's like, okay, they have $300 in afterpay payments that they're making every month. So then guess what? Now we have to put that.
You got to recalculate that back in.
Exactly. We got to put that on your debt to income ratio.
They might just kick you out of the program.
What you said. So if you can't buy it twice,
don't get it.
Right.
Don't get it, man.
It's not that important. You want to get those new J's. If you can't afford it, don't buy it.
Shine for me, daddy. You don't need it. You don't need it.
Yeah.
Just wait. Wait.
Wait.
I see a lot of people, they go buy a new car while they're in the process of trying to get a home.
Yeah.
Why?
Yeah, that's crazy. Like
I see it a lot. That really would kick you out.
Yeah, it will, unless you have the income to support it, right? But if not, like I always tell people, you can buy a house and then go buy a car at any time. But sometimes it may be hard to go buy a car and then go buy a house. So if you already have a car, it's paid off, get in that house first,
right,
and then go look at the cars, because you can always get a car. They put anybody in cars, like they don't care. But the mortgage is more like it's more strict. We have more requirements that we have to go by. So yeah, always get the house first, and then think about getting that car that you really want.
Get you a house to put the car in.
What you said, get that 2-car garage.
Get your 2-car garage so you can put the car in. Man. You don't want the rain hitting all that. You got this nice car, and then you living in an apartment, and then no, man.
Right, and then with a garage, that saves on insurance, right?
Boom. Come on now. We're trying to help you get into a home. My man Preston Roberts is here kicking it with your boy today. So how long does the home buying process usually take from pre-approval, once they get their pre-approval letter, to closing where they're ready to get the keys? How long would you say typically that process is?
Yeah, so typically it's about 30 days. But in some cases, we can close in 14 days.
Okay.
But it all depends on you as the buyer, the consumer, like how soon you get us what we need. Because we're only as good as the information you give us.
Right.
So I always tell people, like, you can lie to your realtor, you can lie to a lot of people, just don't lie to the banker, right?
Yeah.
Because we're going to have to, even when we get you approved, we have what's called the processor and the underwriter. They're going to double analyze the information that we gave them. And if it's not lining up, they're going to need more documentation and more information. So just go ahead and tell us the truth up front.
Yeah.
That way I can come up with the best game plan to get you inside the house.
They're going to fact check it.
Right.
And they're going to pull the receipts. Okay.
We trust but verify. They're gonna verify.
I know that's right, man. What are the biggest mistakes buyers make before closing that messes up their deal?
Basically what you said earlier. So like making big purchases, like buying a car. Like for example, we had a client in the past, few days before closing, maybe a week before closing, they went and fully furnished the house at Ashley's furniture store on a credit card, right? So
but they weren't in the home yet?
No. They weren't in the home yet. So when that happened, the lenders, the underwriter, our underwriter, they seen that and they had to take their furniture back and we had to extend the closing date. But luckily the seller, they were understanding and they let us extend that closing date and we got them the keys into the house. So they got inside the house, we got them the keys. So I always tell people, don't make any large deposits or any huge financial changes, like quit your job, because we're gonna have to verify that too before we
Right.
close.
And while you're in that process.
Exactly. Now, once you get the keys, you take the picture with your realtor.
Yeah.
Like, you go finance a helicopter if you want to. Just wait till you get those keys. That's all I can say.
Well, Preston, man, I thank you for sitting down with me and chopping it up, man.
Yes, sir.
People been hitting me up, sliding my DM, trying to figure out how to get into a home. So if you need some help getting into a home, we got a team of people. We got insurance, we got realtors, we got loan officers here that's going to help you get in there. So if you got any questions, you can always comment below. And Preston, if they want to sit down and talk to you, man, about just getting started, have a conversation with you, how can they get in contact with you, bro?
So you can actually call me direct. Like, my phone number is 931-272-5267. You can call me or text me, or they can go to my website. It's loansbypreston.com.
Loansbypreston.com. Make sure you guys check it out. What's your Instagram? Facebook?
Instagram is Preston Roberts with 2 S's at the end, and Facebook is just Preston Roberts.
There it is, man. Preston Roberts, our loan officer expert on the show today, hanging out with your boy Corey, the insurance guy. Again, if you got any questions about getting into a loan, we the people to help you make it happen, man. See you guys in the next video.